Hi everyone, today I want to talk about something I mentioned in my past video. So as you remember last week we discussed about why companies, or let's say how companies are fundraising, which is they're always fundraising when there are startups, and it's just like divided into different timing. So I call that the two phases of the fundraising, like the jogging part when you're not actively uh, approaching investors, and the sprinting part when you set yourself at some timeline, and you just really go at it. You go all in and you put in probably even a full-time commitment to that. So something I mentioned about the sprinting part is that before starting you should identify the kind of investors you want to contact, and you should put them in a sort of list and just go for it. Try to get in touch with them. I did not mention how to do that, so that's the subject of today's video. Today I want to discuss what is the process that I follow when I'm sprinting, and I'm going to share some tricks and tips that I learned throughout the years. So first of all, we need to identify uh, the kind of company that you are and the kind of investors you're approaching. Uh, what I mean by that is that you should first of all understand how much you're raising, and that determines also the stage of funding that you're looking for, um, because you need to understand the kind of investors you want to approach, right? There are two main options when you are an early stage company. As you know, angels and VC firms. Angels are easier to convince, or relatively easier to convince but harder to find, and VC firms are easier to find but harder to convince, right? So it's very important that you have very clear in your mind uh, that if you want to approach one or the other, it is true that they can combine in a syndicate and in a round. It can be that both VCs and angels are going to participate, but you should always try to find the first investors, the first people who are going to say yes, and you should try to maximize your chances there. So if you are very early stage, go for angels. If you are later on, you're looking already for some Series A, you can go for a VC firm. My recommendation is that uh, you should not go for VCs unless you have a very strong and proven business model that just needs like more capital to expand. And if you don't think your company can be a 1 billion opportunity, or an opportunity that can generate like several hundred several of million in turnover. The reason is VCs are professional investors. They're not looking for the mediocre kind of exit. They're looking for top players, top companies, because that they know that these are the economics of their trade. Most of them are even investing based on the power law, meaning that they know that out of all the portfolio, one company is going to return the investment, the ROI, the return for all the rest of the companies. So they are becoming very, very picky about that. So do not even waste your time on their time by approaching VCs if you think your business can reach a maximum 10 million turnover, because that's something that's definitely not for them. But it can well be something for an angel. Something I wanted to say about angel investors before we start, like with the steps that you should follow to identify the person to contact for your investment round, is that potentially anybody can be an angel, meaning that even your friends can become angels as long as they have an income and a sort of appetite for risk and innovative businesses that allows them to become an investor in your company. I know founders that started to even just send letters to the wealthiest families in the area. So potentially anybody can be your angel, and they're harder to find. Why? Because most of them do not go out there with a tag saying I'm an angel investor. If they do and they're too public about that, I would be suspicious. But there are other ways to identify if they are angel investors, as I'm going to explain in a second. So the first step to look for investors, and here I'm talking about both angel and VC firms, is that you need to identify the kind of investors that are relevant to you and vice versa. How do you do that? It's quite simple. You should find companies that are in your area, geographical area, in your space, So if you are in drones or I don't know fintech, find companies that are within the same area and within your same stage of development, right? It wouldn't make any sense to contact investors in Series B and C's if you are a early stage company. So once you have these metrics, these variables, and you have them very clear for your company, you can find companies that are similar to yours, and you can find them on magazines. You can find them on Crunchbase. You can find them even in your own network. But try to have like a good list of companies. You should not, and I repeat, you actually must not consider competitors and the investors in your competitors, because they're never going to invest in a competitive business. Now you know in which space to search, in which stage to search, in which area. So I would leverage 3 channels to do that. First of all, LinkedIn. So look up the company page and search for people that are somehow involved with that company. There are other advisors or shareholders or even investors. It's going to be more rare, but try to spot those people who can possibly be angel investors if they know that that company raised angel investment, and write down their names somewhere. The second channel I will leverage is AngelList. You can just go on the AngelList website. You can look for companies. Again, either you search them by name, or you can search them by stage or country, and then look at companies that are relevant to you, and you can look at advisors on their company page, as well as if they have any syndicate, any deal concluded, you can look at the people who invest in that deal. The third one that I would say works better for VC firms is Crunchbase. In this case, you cannot really do any filter, so you should go for the name of the company, so it can be like a channel that you use to integrate the information that you found beforehand. Another resource that you can consider are online magazines or articles or even lists. There are some magazines that publish a list of all the done deals in a certain area. And in some cases, they even report the type of investors and their names, so they can also be like a good source. And then you just look up the name, and you try to find information about that person. So now you have identified a rough list of other companies or people you want to contact, right? You should start to fine-tune this list, because it's important that any person you will contact has an interest, or could have reasonably have an interest in your type of business. In other terms, you should be relevant to them, and likewise, they should be relevant to you and your business case. If for angels, it's quite simple, because you just find their name, so you can look up some information about them on LinkedIn or whatever other channel, and determine whether they're relevant to you or not. For VC firms, they usually have many people working there. They can even invest across different geographies and across different stages of development. So make sure to find the people who are like close to you in terms of geography, invest at your stage, and are interested in the space you are in. Never ever contact partners. You should contact either principals or analysts, depending on how big the firm is. I'm saying this because partners will never reply to your emails, and most likely will never even find the email address of the partner. They usually have like one that is more public that they never check, and a real one that they use. So try to find the person who is responsible for deal flow in your stage and area and space for that company, and make sure that he is possibly knowledgeable about your kind of business, right? So if you have 2 analysts, both in charge of deal flow, but one of them has some relevant experience in your field, and you think he may actually understand better than the other your business case, then only focus on that one. This is very important, because you should not, and I repeat, you should not contact every person in a VC firm. You're just going to get a black label right there. Okay, so now we have the persons we want to contact. How to do that? there are two ways. First of all, online and offline. So let's go with the offline first. Offline, attend events, meetups, where you know they're gonna attend, and this can be as small as a meetup or as big as a big conference. It depends. The bigger the event, the slimmer the chances that you will get in contact with the person you want and you're gonna get the attention you need, because it's just that in terms of crowding. Uh, Bigger conferences, everybody wants to talk to everybody, right? So confusion, you're never gonna get anything out of there. So try to focus on, you know, where you can have like at least 5 minutes of attention of the other person. Online is another ball game, as you guys know, and I would identify three different approaches. The first is the warm approach, or the warm channel, uh, an intro, look in your network, look for common people, and and try to get an introduction. And in the next step, I'm going to tell you how to do that. The second is the cold calling, also or cold emailing. It's more appropriate. So you just have to find the email address of the person that you wanna contact, and you just prepare an email. After that, you can use different tools to look for the email. So I will not speak about that right here. And the third one is the hybrid, I would say, that is softer, and it can be like uh, commenting on the blog posts or even on Twitter with the person you want to contact, just to make sure that they can somehow see you and maybe determine already whether you are relevant to them or not. Or it can even be adding people on LinkedIn. Is not necessarily something I would recommend, but in some cases it can work. So sometimes you just have to take a leap of faith. Okay, now you picked your path, your channel, and how to make the first contact, right? So I guess you guys already know how to do networking offline, so no need to talk about that. Online, if you go for the warm introduction, so by asking one of your friends or somebody in your network to put you through the other person, the best way to do that, as much as the other person can be a good contact of yours, is that you make an email and you say, can you please introduce me to this guy, because I would like to ask him for investment. I would like to see if they're interested in our proposition for investment. And then you make a standard text, right, that is short and concise and clear to the point, that they can simply forward to the other person. Usually what happens is that your contact will forward the email, ask for their permission to make an introduction, then do it. Or in some other cases, if they really have like a good connection, they can just simply make the forward the message, put you in CC, and say, talk to this friend of mine. I think it would be worth for you guys to grab a coffee or to have a chat, or I don't know. When you do cold emailing, when you reach out cold, then make a message that says who you are, why you took the freedom to reach out to them, right? So you can even say, I saw what you guys do. I like your investment thesis, and I thought that I would just like to see if we can be relevant for you. Then you make like a brief description of your business, and you say what you want. And what you want is that they ask for more information. So you can say, if you're interested, if you would like to have more information, I would be happy to send you a teaser deck or something like that. Never ask for a phone call with a cold email, because you don't want to waste their time, and they're going to feel like you want to waste their time otherwise. So be very humble. Just make sure that they want to have more information, and after that they are going to ask you for a call, or you can possibly ask them for that, but never in the first instance. Finally, the hybrid version. Again, if you, for instance, add somebody on LinkedIn, also say very, very clearly why you are adding them, so they can at least have the option to accept you or not based on what you write. And it's really like an elevator pitch right there, because it's a very, very short. But if you just add them, without explaining anything, it just doesn't feel right to anybody probably. In any case, keep your conversation short, concise, and to the point, and this will highly increase your chances of getting a response. I hope that this helps you, and I'll see you in the next video.